It's no secret that Florida got hit hard this week by Hurricane Ian. There were friends of mine and clients of mine that had major damage to their homes. There was flooding, widespread flooding in the Orlando and especially in the Kissimmee area of Central Florida. And it caused so much damage and wreaked so much havoc on many lives in this area. And of course, you've seen this all on the news. Our Compass office was flooded. I had friends who lived downtown who were able to just go out of their front yard and get on a dinghy boat that they happen to have and paddle across what used to be streets and go out to the other side of what used to be a lake, but now it's just this whole giant lake area. And they paddled to the other side of, to rescue their daughter and son-in-law whose house was starting to get flooded. So we're also hearing now that people are still being rescued especially in the Kissimmee area from the floods. And this is 3 or 4 days after the storm has passed. So we know it is going to take many years for the West Coast, that Fort Myers area, to recover. Orlando will be in recovery mode for a few weeks to a few months, but for the most part, we will be back on track pretty quickly. My home was not damaged at all, thankfully. None of my properties that we own were in any way affected. We had a little bit of water that came in, but I'm so grateful that we had very minimal to deal with in this situation. The market will be affected by this in Florida, but it's going to be very hyper-local. And I talk about hyper-local on this channel just to help you understand that basically everything is very hyper-local. So my neighborhood, not affected. Kissimmee, very much effective. So there's going to be areas where, yes, there won't be a lot of activity in that area for a while. And especially, of course, we know Fort Myers, and our heart goes out to that area for recovery as quickly as possible, but it's going to be years. So Orlando, really relatively very little damage. So the market will go on and we will continue on. But some of those pockets, especially like downtown Orlando and the Kissimmee area where there is widespread flooding, that will definitely come to a screeching halt in that area for a few weeks or to a few months. And it really will depend, and we've still yet to see what the whole damage picture is going to be. They have to figure out with insurance what's going to cover. Some people, if they don't have flood insurance, they're going to have to come out of pocket with all of this. So a lot of things to think about. And on top of this, in the market right now, interest rates have gone up. They're the highest they've been in 15 years. And I just had a client who got a house under contract, and they were looking at this rate, this basically 7% interest rate, and it's kind of hard to look at. So right now my lender's working with them to figure out like a plan, and there are some options out there, but basically it's a little tricky. So we're going to talk about the hurricane and its effect, and also simultaneously the perfect storm of the interest rates going up like crazy in the last couple weeks. Hi, I'm Kathy Williams, your friend in real estate here in Orlando. I'm with Compass, Florida. Again, our office were flooded, so many people displaced. People are still being rescued, even though the hurricane has already gone through. I'm very fortunate. Like I said, we did not lose power. At one of our properties, we did lose power. But again, I know people who got 3 to 20 inches of water in their home. And these things you just don't really think would happen in Orlando. So we usually don't get that much activity with hurricanes. Maybe some downed trees, some high winds, we get some branches that fall down, some people lose shingles on their house, but we really don't get the type of destruction that we saw with all this flooding, all the rain that came down so quickly. Other than that, like, you don't see the big trees down. You don't see what we typically see here. So if you didn't have flood insurance, it's going to be very tricky. So with this issue of the flooding, a lot of people do not have flood insurance, especially if you don't live in a flood zone. So we're going to talk about that more in the weeks to come as we see what reveals itself as additional problems for the Orlando area. Today, I wanted to give you a little bit of a market update with relation to the interest rates so that you can kind of get an idea of what's happening in the Orlando real estate market. Interest rates are the big story right now, aside from the storm. And we're going to look at what is happening, what's going on in the market on a national scale, interest rate hikes, and then we'll get into more specifics about what's going on in here in Orlando. And we'll talk about the updated information with some of the local stats. The Fed hiked the interest rates by 75 basis points, trying to beat inflation. And it's not exactly a surprise that they're doing this. We are at the highest since 2008. They've talked about they're strongly committed to bringing inflation back down to the 2% range. And they've committed to continually increase the rates to get us down to 2% inflation. So that means the rates will continue to rise for mortgage rates as well. Rates are so high, they've definitely gone up, and we are definitely going to feel the effect of that in the housing market. Let's look quickly at the housing market nationally. The housing market may have to go through a correction, Freddie Mac is saying. Again, we're not shocked at this. If the Federal Reserve is increasing interest rates and the mortgage rates are going to continue to rise, it's going to put pressure on housing prices. And they're trying to address the worst inflation the economy has seen in 40 years. Right now, the rates have gone up again, and recently I had a buyer who was able to get 6.75 with a product called a 2-1 buy down. This was offered to her in order to get the lower rate for the first 2 years of the loan, and then she will be over 7% on the third year. So it's just buying a little time to see if the rates go down. So there are some options out there in addition to just buying down the interest rates, but that's really expensive. A year ago, the 30-year mortgage rate was at 2.88%, and that is such a huge difference. It's impossible to imagine that we are more than double where we were last year, and yet home prices really haven't fallen that much. So it's really creating this market that's becoming very unaffordable. And the bottom line, the Fed is committed to continuing to increase this interest rate. So this pressure is not going to let up. So what we're seeing is that there is still demand. It's not as strong as it was in the past couple years, but it's still desirable to buy in Orlando. Not everybody needs to buy right now, but if you're looking to buy, there are people who need to buy in the area right now. Perhaps they've got a job move, or perhaps they're thinking, let's jump in now before the rates even go higher. So let's look at the Altos report. I've spoken about this report before on the channel. It shows data about where the market is and has some great tools to help you see the demand, what's going on in the market, how prices are going. And I think it's better to show statistics than it is to just have me kind of talk to you about it, because the statistics are from the real numbers, right? That's not just me talking about it. So as you can see, the market is still continuing to plateau. We are seeing an overall decrease in activity, which is suspiciously consistent with the increases in mortgage rates. So that's closely tied into the activity that we're seeing. However, you see that prices have decreased from the beginning of September to the end of September, but they kind of tipped back up at the end. They went down and then tipped back up, and now they're back. They're back up a tiny bit, but you can see there's this downward cycle of the median price range. And of course, this is showing the average days on the market and the median days on the market. Of course, you can see those numbers have gone up. Last year, this time, we were looking at 1 week to 2 weeks on the market, and now we're in the 40 to 50 day range. So there's a lot of change that's going on in the market right now. We still have to see what's going to happen. Is the hurricane going to affect the Orlando market in a bigger way than I'm even thinking, or is it going to be less? We're going to have to kind of track the numbers. So I'm going to go week by week and kind of do a tracking of the numbers for you so you can see what is happening. And that way you can be able to make an educated decision about whether now is the right time to buy. I always tell people to be sure to check with your lender first. I can make a great recommendation for a lender if you need one, to make sure you know the numbers before you jump in and buy. And we're definitely going to see what's happening. Of course, the market is still in a seller's market technically, but I can tell you that I'm definitely getting more negotiation in for my buyers. We've been able to get price reductions. We've been able to get closing cost dollars, inspection repairs done. So things that have not been taking place in the past couple years. So that's great. Thank you for joining me today. I look forward to seeing you on my next video. Bye-bye now.